Uh, Here's why you might be mistaken about Tesla's stock pricing. The exaggerated values of Tesla bulls are well known. Renowned Tesla bull Ron Barron forecasted a 3 to 5 return for the company in 10 years. According to Kathy Wood's 5-year prediction, market is expected to be worth $3 trillion or $3,000. On the other side, skeptics represent the extreme end. Citigroup Incorporated raised its price objective to $313 on January 27th, although it still maintains an underweight rating on the business. More than 70 declining stocks have price predictions from JP Morgan Chase & Co. Do you want to discover why everyone believes that Tesla stock is valued incorrectly? To find out, keep on. We'll argue in favor of the pessimistic perspective. First, Tesla produced 305,000 cars in the first quarter of the year and delivered 310,000 of them, translating to an annual manufacturing pace of over 1.2 million cars. Production and delivery of Model S and DX vehicles have almost stopped, with 17 of new cars being leased. This business segment seems to be reviving thanks to the company's new Roadster, but there's no word on when it will be released. 4 divisions comprise the company's vehicle business. In our opinion, the Model I and Model 3 are inexpensive cars that fall under the first group. The expensive Ferrari-like cars called Roadster come in second. The Model S and X are mid-high-end cars that fall within the third category. The company's efforts in the field of self-driving automobiles make up the fourth area of focus. The company announced a lot of excitement about the Roadster, but the release date has been continuously delayed. The most recent estimate is for 2023. Whether it will actually occur in 2023 is still up in the air. Next are the company's Model S and X, which are, in our opinion, the reason behind Tesla's current state of development. Sales, however, only make up a minor portion of the company's revenue, and the company hasn't performed well in a while. The company's yearly revenue is therefore only a few $billion. Next are vehicles that drive themselves. This is still up for debate. The firm does indeed have an FSD beta, but it keeps pushing it back. Musk stated that it would be released this year, but we don't know for sure. Therefore, the release date is largely uncertain. Tesla has infuriated customers who paid more for the service and anticipated it sooner by continuously delaying the timing of its full self-driving release. Once more, we're not saying that Tesla won't win. Still, Waymo, whose valuation has decreased from $200 billion to $30 billion, would make an excellent case study. So we will examine the Model I and Model 3. This entry-level models are currently on the market, and by 2022, the company hopes to be producing over 2 million cars annually, mostly from these models. It appears that Tesla is getting closer to entering the mass market and facing increased competition. With 10 million cars sold annually and a market value of $280 billion, Toyota is a relevant measure here as the leader in dependable, affordable automobiles worldwide. It is important to remember that there is a significant difference between 2 million and 10 million automobiles annually, even with a 50 annual growth rate. Disregarding the positive timeline, let's examine necessary conditions for the corporation to attain a $5 trillion valuation. A company's free cash flow needs to be higher than a specific level in order for it to be valued at $5 trillion in the long run. It could not be at the time the business achieves the valuation, but there needs to be a route for it to take. Since inflation will reduce the value of the dollar to 1 to 5 times its current value, we won't account for it because we presume investors don't want a company with a 5x market price. The most generous estimate is $5,000 in profit for each delivered car, multiplied by the annual sales of 500,000 vehicles. In the event that the business succeeds, that amounts to a total of $25 billion in free cash flow. We are investing $300 billion, or 10 times Waymo's worth, in the self-driving industry at an 8 rate. Energy storage, another business. At the moment, the company holds a 7% market share, but we'll give it the benefit of the doubt and assume that it will quadruple that to almost 20 in the coming years and decades. Given the company's performance, some could contend that it's too low, but this industry has never seen a significant mode. Additionally, we'll provide a 20 buffer based on the assumption that by 2030, the price per kilowatt hour will be $150. And this translates to capital expenditures of $30 and $30 and FSCF. In the high-end car market, we are now considering AVs like the Roadster and Perhaps the model is an X. We think comparing this company's earnings to those of its peers is the best way to evaluate it. A premium luxury company may be worth as much in free cash flow as Mercedes-Benz and BMW put together, or about $30 billion. Tesla's bullish investors still forecast market-beating returns even after the company's valuation has surpassed $1 trillion. This is true even though there is still room for other companies like Apple to expand from here. We think that Tesla's absence of a sizable free cash flow stream and a clear path to shareholder payouts could be a problem. However, let us examine things from an alternative angle. Although a lot of people think Tesla is an expensive stock, the public's perception seems to be changing as petrol prices rise. Sales of Teslas have already started to soar, and we think this may only be the beginning. Given that petrol is mostly produced in Russia, the world's top producer of crude oil, petrol prices are likely to stay high for much longer than anticipated. Moreover, it's almost as certain that many nations will become less dependent on Russian energy. In the event that this happens, petrol prices will unavoidably rise as other suppliers attempt to meet the sudden spike in demand. Naturally, Tesla cars are pricey. On the other hand, petrol prices rise over time. Petrol prices can be particularly burdensome for people who live in rural areas of the United States where cars are almost a need. In the long run, buyers might find Tesla cars to be more affordable if petrol costs don't decline. Tesla has an advantage over its rivals since it was among the first businesses to take electric vehicles seriously. With no serious competition from its primary rivals, Tesla has effectively cornered the electric vehicle market. In addition, Tesla has some of the best self-driving technologies available together with some of the least expensive maintenance costs of any vehicle. They are essentially charging more for user friendliness, just like Apple did with phones and EVs. Long-term rivals of Tesla will undoubtedly catch up, but due to its widespread appeal, the company will still account for a sizable portion of EV sales. Tesla produces a range of income-generating energy solutions, including solar roofing and storage or charging systems. In addition to electric vehicles, this puts them in the forefront from a number of perspectives, and the global transition to renewable energy sources will undoubtedly help. To sum up, I think Tesla will last for a very long time, even in the event that Tesla maintains its lead and global adoption of renewable energy occurs in the future. Market sentiment may not be consistent with the high levels that Tesla is known to consistently achieve. It's crucial to remember that the market is still very erratic. Tesla and the rest of the market will surely go into recession if the current state of the world economy continues. Recessions can bring lower petrol costs, as they did in 2008 and 2020. Traditional analysis suggests that Tesla is still overpriced, but there's more to the stock than just market size and earnings. Tesla has increased even though it has been essentially overpriced for almost 10 years. To put it briefly, it seems that traditional metrics do not work for Tesla. Additionally, Tesla has had outstanding revenue growth and is gradually narrowing the difference between its market capitalization and revenue. All this is accurate. Any favorable assessment is contingent upon Tesla's future accomplishments. Musk and his business have a reputation for making grandiose claims and then breaking them. What occurs if the business falls short of its objectives? What would happen if Tesla's macroeconomic environment suddenly became unsuitable? Nonetheless, on this channel, we support Tesla. Given Tesla's recent quick growth and the global shift in governments towards renewable energy, it is realistic to anticipate a rise in the company's valuation. Regarding Tesla, are you bullish or bearish? Please leave a comment below.